Hello and welcome to yourfinance.tv, our first ever show. How exciting is this? You might recognize us from our Nucleus 195 days, which was bought by Open Exchange in 2021. But now we've gone out by ourselves looking to bring you even more content from some of the great investment minds from around the world. You'll recognize our first guest, Brendan McCarty, founder of Column E, and you can see the link to their website in the description below. Welcome to Your Finance TV, Brendan.
Hey, thank you for having me.
Before we kick off, don't forget to click on that subscribe button and like buttons below. We have a wide variety of content coming at you, so we want to make sure you don't miss a thing. And if there are things that you want to hear or want to make suggestions, make sure to drop a line in the comments. Okay, today's show, we're looking at where are we going with these markets? A deep dive into the earnings for BP, Royal Caribbean and Uber this week. And love it, like it, leave it, we'll be looking at Yum Brands, Under Armour, Hilton, Disney, Ralph Lauren and Duke Energy. Let's jump into the show. What are we to make of these markets? Nasdaq's up nearly 15% so far this year, S&P nearly 8%. And people are even making money in Bitcoin this year. Are we back to a bull market? Are investors that have been sitting on the sidelines jumping back in with 2 feet? On the flip side of this, the Fed has given no indication that interest rates hikes are coming to an end. And just last week, we saw that US credit debt is at a record $930.6 billion. Brendan, can you make heads or tails of this market?
It's an interesting market. It does have plenty of heads and tails. Based on various reports we've seen of late, though, like the jobs report on Friday, for example, I get the feeling that credit card debt is anticipation of better wages and better job growth. So we're seeing pretty robust amounts in each case. That argues if people are getting better jobs with better pay, then they're going to forward spend on credit card debt regardless of how much it is. What's interesting is, though, you saw deposits drop, and we were trying to figure out, like, I looked at the numbers and I was like, why are deposits dropping at the banks? And are people running out of money, or are they spending it so quickly and they need credit cards to fill the gap? So that's two sides of that coin, the heads or the tails, so to speak, in terms of, is this real, or is credit card debt a symptom of weakness? I think right now it's a symptom of strength. That's basically, in terms of the markets themselves, this could be we could have seen January higher only because we're seeing an increase with all these jobs. You're seeing an increase in 401k flows into these markets and the passive instruments. Predictably, a lot of these brokerage houses have like international markets, and that's where all the money seems to be pumping. Like if you go overseas right now, European stock indexes are on fire, breaking to almost near all-time highs. I think the CAC 40 is almost there. The DAX looks really strong. Even the IBEX is not so bad in Spain. They're all like chugging higher. I think the FTSE hit a new high. You go elsewhere, though, where momentum is really not a play. Like the US is rising, but it's against a negative profile. Asia's mixed. So you're seeing, I think 401k flows are translating into let's buy the Europeans in the strength of the world. We still argue at Column E that we're still in a long-term bear market. The range has been wonderful, though, if you've been able to play it since the beginning of January. The short term has just been very strong. I think it turned up the end of December, early January, and it's been rising ever since. 4,200 might be an issue for the S&P. We'll see. On the crypto side, the Bitcoin move caught everybody off guard, and probably including the bulls. Even that guy, Michael Saylor, as Saylor of MicroStrategy, was surprised to see the move, and I don't think he was even as bullish. Is 24K a top again? It's possible. It was last time. Reason we say that is because the dollar reversed real heavily last week, big time move across the whole globe, where we saw the British pound and the euro reverse lower. And if the dollar is rallying, does that put crypto back on its back foot again? So it's been quite an eventful start for 2023 indeed. February, we expect to be another volatile month.
Well, according to Kathy Wood, Bitcoin's got $1 million, so maybe it's a good time to be getting involved.
Yeah, and ARK is the next NASDAQ, or replacing the NASDAQ as well.
Yeah, we'll save that for another morning call. All right, let's move on to some earnings for this week. Sorry, what was that, Brendan?
We're going to pin that on a board somewhere and look at it years from now.
All right, as I said, let's move on to some earnings for this week. As you can see from this image from Earnings Whispers, it's another big week for earnings. Some very interesting names reporting. I wanted to kick off with BP. They report pre-market on Tuesday in Europe. The news last week of pulling back on their renewable energy strategy and de-emphasizing its green energy strategy as well was met with mixed reactions. I saw an article in the Times over the weekend that their wind and solar projects have been promising returns of 7 to 8%. But now that debt is costing 8 to 9%, and let's be honest, if it was costing 5%, it really isn't that attractive to a big corporate. Could this be like Meta stepping back on its spending on the metaverse, and we could see a rally coming over the next couple of quarters? Looking at this chart of BP versus Chevron and Exxon, has been a very big underperformer versus its peers. What do you think we can see from these numbers, Brendan, and going ahead?
So BP is stuck in the stuck in the metaverse. It doesn't really work. They're kind of stuck. They made this big push into the biofuels, and if you look at we took a chart. I looked at the chart of the XLE, which is top heavy with Exxon and Chevron, so it's the same chart. But I couldn't believe the underperformance of BP over the last 3 years. Like, it is dramatic relative to the XLE, and it's right off of the pandemic lows, strangely enough. They made this big push into ESG like a lot of players did, and they can make a shift. Like, the biggest takeaway from your question is they made a shift away from energy, fossil fuels. It's not like you can go by and turn them back on. So they made a push out of it. They're paying for that. And now you're seeing it work against them. Interesting enough, though, Bloomberg said, so you were saying that they're only working in about 5%. Bloomberg is saying that their return to investors is a distribution yield. They think they're going to get about 15% distribution yield to investors between dividends and buybacks. That would be a power for the stock theoretically. But ESG, as we've learned, is not ready, or it's not big enough to cover the demand of the globe. Like, we've been talking about this for like 2 years now. I mean, I went to a conference in 21 where they were saying, like, why are we getting away from fossil fuels? Because there's just not enough ESG fuels to do it. And like, solar is still very expensive. And like, until some Walmart sticks them on the roof of every one of their buildings, it's a really expensive, really expensive energy. So BP, it figures that they now shift the other way. 3 years after underperforming the market, they're going to shift back the other way when crude markets are moving lower. So they're just going to bounce into the energy markets that are sinking. They're already not doing well from natural gas. Natural gas is off about 80% from the highs from last fall. So you're dealing with their gas exposure has not helped. I would say this is going to be a pretty ugly report. I believe they were looking for a drop in income. They think the focus on gas is really going to hurt them, and it's going to impact earnings negatively. The chart hit all-time highs last week, 2 weeks ago, and reversed lower last week. It looks like the market's saying, all right, the run's over. We've hit the highs. You've been lagging behind everybody for the longest time. You can't go much higher because you're shifting gears. That's my feeling. So I don't know if this report's going to be any good. Alternative fuels aren't a profitable business right now. For example, you're seeing electric cars come down in price dramatically. They can't be the only ESG thing coming down in price. So I don't think this is going to be a great report or an outlook. I think it's stupid that they're going away from you shift your whole business in one direction. You watch everybody do the other thing and make money, and then you start chasing them. That doesn't make good business sense, in my opinion.
It's interesting you bring that one up. Like, I hadn't thought about this one before, but maybe this is another stock that's going to be prime for activists, like activity. Considering the run that they've had and that big underperformance, you may see an activist come in here and say, we want to get a change of management here and freshen things up.
Yeah, and if they get a 15% distribution on their newly bought shares, and the activists, they'll benefit there too, because they'll be getting a decent dividend. It's just not management. You see bad management teams from time to time. Like, we talked about Target a lot last year, screwing things up during inflation. This seems like a bad decision. This is not, and I think it's going to read through on the earnings report. The stock rallied strong, though. I mean, it's hard to argue with it, but I just don't. It reversed from the highs. It didn't break out from those highs. And if it's going to be a negative report, it's probably going to trend lower.
Okay. Let's move on to Royal Caribbean, and they report pre-market on Tuesday. And hasn't this stock had a run over the last 6 months, with it being up more than 120% since its low in July? They have a lot of their debt locked in at lower interest rates, doubling their debt from 2018 through to 2021. With close to $24 billion in debt and a $17.4 billion market cap always makes me nervous. What is the catalyst for this stock to get back to its pre-pandemic levels, i.e. over over $100, Brennan?
So this RCL and CCL have come a long way since we started first talking about them, and they weren't sailing ships like 2 years ago. They're heavily indebted, as you mentioned. They had no earnings. They were pretty much sinking ships, no pun intended. The problem with them is, well, actually, right now they're like, best way to describe them is a high volume business that the deck chairs are constantly moving around, right? What is it? Chuck Prince said years ago, as long as the deck chairs keep moving around and everybody has a chair or something like that, will stay in business, or I can't remember exactly. Well, right now, everything is their volumes are rising. They have 95% capacity for next year at higher margins, higher prices than last year. And they have 12% bookings higher than 2019, which is what everybody's using for a proxy. Problem is, as you said, they have that higher level of debt. So the big threat to this company is if that volume slows and they have to move any of that debt. They have to like roll it forward. I don't know what their debt profile is. I do know that corporate debt risk is coming down overall in the marketplace. So I'm guessing it's probably spread out against better cash flows. RCL's chart reflects how good things are right now. If you have higher margins, almost full capacity, 95%, you're making money. Now, remember what the airlines, they had 100% capacity. They were making money, but they couldn't make enough money to pay off their debt. And that's what hurt the airlines for a very long time. These guys are buying new ships. They need to get more online. That would help their long-term business so they could better pay off the debt. Right now, though, the story is very, very positive. My only question is, what do they do? How they answer the question? How do we work with these higher corporate rates? What does this do to our cash flow? The chart says the stock's going higher. The market thinks the news is going to be good in the earnings report. There's breadth to support this. You're not seeing breadth in a lot of the U.S. markets in general, but you're seeing it in first select stocks, travel stocks in general, looking like this. I would just say it's probably going to be a good report. It'll be a great read through on the consumer. Maybe all that credit card debt is piling into the Carnival Cruises and Royal Caribbean. I don't know.
Listen, it's a legitimate discussion. We probably do need to sit down about this at some stage. Between, you mentioned airlines, you try to book a flight anywhere for a reasonable price right now, it's impossible.
Yeah.
And people are still spending up on their credit cards to go do these trips. Now, the whole build-up of like people wanting to get out after COVID. Listen, COVID's done, or not done now, but everyone's a lot more relaxed on the COVID front now. But when does that build-up start to slow down? It's obviously from the bookings we're seeing, it's not right now, but it has to happen at some stage. And with layoffs and all that sort of side of it, got to think that the consumer starts to tighten the purse strings at some stage.
Yeah, it's when exactly. It's not. I'm not sure where. Remember, we came off the pandemic lows. We didn't know it would stop. It just kept going and going and going, and we didn't know when the economy would finally hit a flat line. It seems like we're hitting another one of those, where the Fed is not really sucking money out of the system. Rates are coming down a little bit, so you're seeing people buy houses. It seems like the consumers adjusted because they have a lot of savings still. So I don't know when this ends. It's kind of an interesting. It's an interesting setup. Let's put it that way.
All right, well, actually, let's go on to another pandemic stock, Uber. And they report pre-market on Thursday. We haven't looked at this name in quite a while, Brennan. It's had a big run so far this year, up nearly 34%. Are we sleeping on this name, or is the share price at a level where it continues to struggle?
So I've never been super excited about Uber. The cities really haven't turned fully back on. If you go across the country, New York City is packed, and it's got plenty of business. But I go back to New York City is that I found myself walking 20 blocks instead of taking an Uber recently. Do you really need to take an Uber, or can you walk? I mean, life has changed a lot for a lot of people. We got used to walking and spacing out from people. I mean, all Uber is a glorified taxi service, and it's sort of, and they revolutionized the taxi business. Let's put it that way. But like delivery, I go back to paying $6 for delivery service. I that's not a deal to me. That's just inflation. I can just go regular. It goes back to the local pizza place. You know, I wrote about the 5 pizza places near my house at the beginning of the pandemic. I had my choice. Do I really need 5 pizza places? Well, do I need Uber delivering it, or somebody else can deliver it for free? Now, Uber's story is their business in general is not really growing. It appears, according to Bloomberg, and like Lyft, which reports on Thursday, is losing ride share. Well, Bloomberg is speculating that Uber's taking it. A growing business does not see people one take business from the other necessarily, and one lose business, and not like basically both grow. They just grow at different rates, right? So I think Uber's in a business right now that basically argues that it's mature, or it's flat, or like the taxi service is, it's flat. Now I had this was interesting enough. One of my hockey players missed a bus about a month and a half ago and took an Uber to the game. So Uber is very much in the minds of the younger kids. What's this argue for the long term with Uber? Probably a good thing, in that the younger groups may not be in cars as much. They may be more in Uber. So Uber is still the brand name, and it's still the powerhouse, but it hit $34 recently. That's a level it ran into in April of last year before the Fed started hiking, and September before the markets peaked. I wouldn't be surprised if investors saw the 34 number, sold it, aren't really excited about the earnings report coming because there probably isn't a lot of growth. They think they have a whole transport business outside of people that is dragging on business. They think the delivery might be also food delivery might also be slowing, but they have some new incentive programs that might help. So there's a lot of questions for this earnings report, and I think investors starting to sell at 34 is an indication that they're not willing to. There's a lot of uncertainty. Let's put it that way, because 34 is a very common number. It was a support on the way down. It's resistance on the way up. Investors want to know, all right, what's the future look like here? Is the business just a taxi service that's mature? Is the outlook for cities better? Are you going to run into more issues like California did with your employees being full-time and not contractors? So there's plenty of questions, and the stop at 34 is ominous to me. So I think the earnings call will have to clear up a lot. Is this management team great? They really haven't been that great. So it's a business that definitely has a lot of possibilities for the future, especially with electric cars coming to them. But I think it's one of those calls where you're going to be like, do I want this at $35? Probably not. I'll probably take my profits after the call.
Yeah. It's interesting actually mentioning Lyft there. They got this thing, the stock's up over 100% from its lows, and in a short amount of time as well. So, but at the same time, Lyft is like 10% of the market cap of Uber. So
yeah,
Uber Eats makes a huge difference to them. But as you said, maybe there's a little bit of slowdown there. There's a lot of people who are actually starting to eat out a lot more, or have been, I should say, not starting.
people want to get up, right? I mean, it's just like you enjoy seeing your friends. It's just people are getting back into the mode where you have business meetings, where you have coffees, where you go out for whatever it might be, and we've all adjusted. So I like to say that the Fed raises rates. All of a sudden, we're paying 20% on our credit cards. Well, you know what? We see it for about 6 months, and then we adjust, right? That's what human beings do. They adjust their spending patterns. Well, in terms of interactions, well, we finally moved past COVID, as you said, and we're now adjusting. We're adjusting back to what makes things work. And is an Uber? I mean, an Uber will get us from one coffee shop to the next necessarily, or we could walk. I don't know. It's an interesting. It'll be a good read through on what's happening. But the stop at 34 is just pretty big to me.
Yeah. All right, let's wrap up the show with like it, love it, leave it, like we always do. The viewers that haven't seen this before, there's a selection of names that we choose for the week, and short-term sort of calls like for the week. I've got 6 for you this week, Brandon. You ready?
Let's roll.
All right, Yum Brands, they report Wednesday pre-market.
I like it. chart points up, but we'll say the breadth is leveling off, and there's a threat to this bullish view. So it's a tough one, but I like it.
Under Armour report on Wednesday pre-market as well.
Strong chart. Under Armour is growing sports-wise. You're seeing it. Strong chart with a climb through the 65-week, which is positive. Breadth also supports it, so we call this a power breakout. It's the first time it's been this way, though, since 2021. So some opportunistic shorts might show up, but I like it.
Okay, this one was a little bit of controversy last time we made this pick. I'd have to have a lot of back and forth with someone on social media with it. But Disney, they report Wednesday after the close.
Yeah, the House of Mouse is always a challenge. It's always a battlefront, right? I'll leave it again. I think I left it last time. Maybe. Yep. I don't know. The House of Mouse seems to be in disarray. Iger's back, but excuse me. But I don't know if that matters in the short term. It ran into range resistance, we call it 112. So we would leave it.
Okay. Hilton reports Thursday pre-market.
Conversely, on the other side of I know this Hilton's in the Disney place, but that doesn't work. Anyway, Hilton, we like it. Strong chart with supporting breadth. Again, it's similar to Under Armour. It looks like RCL from earlier. So is that your travel comparison? Travel in general is picking up. Maybe this is the time you book it, so maybe Hilton's benefiting.
Okay, Ralph Lauren, they report Thursday pre-market.
So opposite Under Armour, which is benefiting. I shouldn't say that. Ralph Lauren, we leave it. However, the chart is at a key level and the chart is really strong. So they say, don't jump in front of a moving truck. Well, we're jumping in front of a moving truck by leaving it. Its chart is really strong though, and the brand it's going to be a tough one. So we're leaving it, but we might get run over by leaving it.
Get off the tracks, train's coming through.
I used the wrong one. It should have been a train.
Okay. And the last one we're looking at is Duke Energy, and they report Thursday pre-market as well.
So I like it. I will say our Ralph Lauren's chart is more powerful. Duke's chart is less powerful, but Duke bounced off the 65-week. Typically in bull market runs, stocks bounce off the 65-week and then resume that run. It bounced off the 65-week last week. It fell through it, actually. Came back above it by the close. So we like it. It would be nice if it took 102 in short order.
Well, Brandon, thank you very much for your time today on our first show for Your Finance TV. It's great to have you back and great to be talking to you again. Hey,
thanks for having me on this great new medium we're on.
Fantastic. All right, for everyone watching, don't forget, click that subscribe button if you've got this far. And we look to bringing more shows to you very soon. Until next time, good luck investing.